So yes, I think to put it in context, 18 months too late, Shweta, but BYJU'S has finally released its audited statements, financial reports for FY22. Remember, these were supposed to come out in the month of September after a much delayed, in any case, timeline. But we have finally seen that the numbers have come out and interesting figures popping in there. To begin with, of course, as expected, the entire edtech space was growing, continuing to grow even in FY22, and that results in the 2.3x, almost 3 times the number of users that BYJU'S got and the revenue that BYJU'S added by way of the total number of people subscribing to its education platform and the tools and the curriculum posted there. But interestingly, we also see that there has been a narrowing of losses. Now, this narrowing of losses is obviously good news, but the fact is that it continues to have losses in excess of 2,200 crore rupees or so. So this means while there has been a decline in losses from 2,400 crore levels, it still is a fairly large loss-making unit. Now, look at the EBITDA or the operating margin. The margin has also improved, but still continues to be in the negative territory. Overall, it is nothing really, surprising as far as these numbers come. These are staggering numbers. There has been a growth as expected, but at the same time, there have been losses mounting in thousands of crore rupees year on year. We have seen that, 2023 was the time when FY23, I'm talking about, April 2022 to March 2023. FY23 is when we saw markets really opening up, schools resuming. Overall, this decline in edtech started surfacing only in FY23. So while this 18-month delayed FY22 numbers come on expected lines, I think by end of the year when FY23 results come, that is when we will actually see how bad a situation BYJU'S could possibly be in. Now, just to add further context to this, what are the issues which are plaguing BYJU'S right now?
Before we move to that, I also want to understand, there's nothing surprising in these numbers. Are these numbers in line with the expectations? Are they good or bad? How is one to interpret these numbers?
Okay, so Shweta, I think, it's fairly obvious. Everybody knew that there would be growth when it comes to revenue for all edtech platforms in FY22. So on that account, this number is not that surprising. I don't think anybody was expecting degrowth. This was a time, FY22 was a time when there was this boom almost maturing for edtech. So the kind of 2.3x growth, 3,600 crore levels that we've seen, to me, it doesn't seem unexpected. Neither was anybody expecting this company, which was on a very high aggressive growth path, to immediately turn profitable. I think growth is something that all venture capitalist funds, all investors obviously always push startups for. And that push has resulted in the numbers that we have seen, right? Now, unit profitability, unit economics is something that listed companies, which are listed on the stock markets, those investors look for profitability, right? So I think it works quite inversely when it comes to privately funded, VC funded startups versus mature listed organizations, because all VCs want is the startups to grow at all cost, continue acquiring more customers, burn cash if required by way of advertising, branding, etc. And then, of course, the acquisitions that you keep making. So there were a total of 9 acquisitions that BYJU'S had made in FY22. So the idea was to grow at all cost, and that growth at all cost has resulted in the statements. The cost there, of course, is the losses which have mounted. Now, again, losses have declined despite this enormous growth. Losses did not go up in line with growth. Losses have declined slightly. But again, I don't think this was unexpected. I am really looking forward to FY23 reports, because that is where I feel you would have seen a plateauing, if not a decline of growth. And then this term B loan which BYJU'S had taken would have kicked in, and that would have messed up the books, a little more.
Okay,
but
so financial year 23 report would be a make or break for BYJU'S.
I'm not sure if we would still call it a make or break or not. See, remember, we are at an interesting juncture right now where, because of the reduced valuation at BYJU'S, raising fresh capital would be easier. It is easier to put money and take a larger stake in a company which is not $22 billion. Right. If it were still commanding the same valuation, then raising capital would become difficult for Byju's at this stage, because VCs would get a much smaller share of Byju's at a $22 billion valuation than they would when the company is at about $5 billion, $6 billion valuation. So raising capital may be easy enough for Byju's right now, but dilution of stake for Byju's would be higher, which means this declining valuation is bad news for Byju's. It will have to shell out more equity to raise the same amount of money as it would have liked to raise at a higher valuation by parting with a smaller chunk of equity. But there are other challenges also. Number one, of course, is this whole Aakash listing. So we don't know what is going to happen to that. Aakash continues to be a profitable business for Byju's, and even after it acquired it, about 2 years ago, Aakash is something that, by virtue of listing, would give Byju's a much better sort of leg up when it comes to its overall image makeover. And of course, additionally, raising public funds through an IPO is going to help shore up some financials for Byju's, but that is still pending. The $1.2 billion loan that we spoke about, we still don't know how, in what capacity and how much would Byju's be able to pay and when. Now add to this the no clarity yet, so to speak, on Great Learning and Epic, the two platforms which Byju's had acquired, part of those 9 acquisitions, which it now wants to sell to repay part of yet? Or all of. We don't know. I mean, there are multiple talks on, there are US-based companies which are perhaps looking at buying it, but we don't know where that is going to head and how long before that comes to an end. Now add to that more complication. Byju's CFO, newly appointed CFO, Ajay Goyal, has also quit just 6 months, 7 months into the company, a little longer maybe, has gone back to Vedanta, where Ajay Goyal came from, because Vedanta is also undergoing this massive, demerger of its multiple businesses. So troubles don't seem to end completely with just stating out this FY22 financial audit report, but at least one step at a time, those reports have been released, the financial statements have been released, and thereby setting the stage for FY23 numbers also to make it to public domain in some time from now. Hopefully end of this year is something that Byju's had targeted. In fact, even Ajay Goyal, when he was CFO, had said that December is when FY23 numbers should release. We saw FY22 numbers, despite this very, very long stretch deadline, miss the September deadline and get released only in the month of November. So by that account, if not December, maybe Jan, mid-Jan, end Jan, we should be able to see FY23 numbers. And thereby, we'll know whether there is any hope really still left in this large edtech industry to continue growing, and if not, is it time for consolidation? And it'll give us some cues on where the sector is going at large and where specifically Byju's could go from now.